This is Mike Lingle from Rocket Pro Forma, and today I want to talk about debt. So I had a company called Tonic Studios. It was a tech startup. It was going great. We had hired a bunch of people, and then all of a sudden the dot-com crash hit in 2000. You can see my gray hair. I've been around a while. And all of a sudden, we ran out of cash. We had great customers. We looked profitable on paper, but our Fortune 500 customers stopped paying their bills. It was hard to sell new business. All of a sudden, we had to lay some people off, which sucked, and we also had to take on some debt. So in digging my way out of the debt, I learned a few things. I learned that debt affects growth, right? So if I'm a business, the debt payments that I'm making are non-productive, which is fine if I've planned for it. We hadn't planned for it, so it was a little bit of an issue. And the second piece to keep in mind is debt can only be paid back out of profit. If you're not paying debt back out of profits, you're just pushing debt around. And in order to pay debt back out of profits, you have to cover all the expenses of your business and have money left over. And if you're profitable, you also have to pay taxes. And that adds up pretty quickly. And we haven't even talked about the interest rate on the debt. So I was able to work my way out of the debt. But let's take an example. If we have a 15% profit margin, so after covering all the expenses of the business, we have 15 cents left over out of every dollar. And we're paying a 24% tax rate, either for the business or our own personal returns, the money that flows through, whatever, let's call it 24%. How much revenue does the business need in order to pay back $100 in debt? I will give you a minute. You can pull up the calculator. You can pause the video. The answer will surprise you. Ready with your answer? $877, which is a crazy amount when compared to the $100. So how does the math work on this? First of all, we take the $100 in debt and divide it by our 15% profit margin. So it's going to take $667 to pay back that $100 without factoring taxes. Now when we factor in the taxes, when we pay the 24% on that 667, we divide that 667 by 1 minus 24%. That's how we get to the $877. And we still haven't even considered the interest. So just be aware of this. It's not that you can't take on debt. Obviously, businesses take on debt all the time. Just be aware that it takes some work to pay it back. And it definitely put my business in a hole. I was able to dig my way out. But it was a challenge. And one of the things that really helped me in building my business back up was I started doing my own bookkeeping and started really trying to understand how the pieces fit together, right? How do the financial statements fit together? How does all this stuff work? Which actually planted the seeds. This whole thing planted the seeds for Rocket Pro Forma and what I'm working on now. So anyway, that's my public service message about debt. Thanks so much. This is Mike Lingle from Rocket Pro Forma.